Okay, let's be real. If you're in crypto right now, you are feeling the whiplash. One minute, you're on top of the world, conviction is sky high, and the next, your portfolio is just, bleeding out. So what is actually going on? Today, we're going to try to cut through all that noise and figure it out.
Yeah, this probably hits a little too close to home, right? Just a few weeks ago, that little voice in your head was so sure. And now? Well, now there's just a wall of red, and that voice has gotten awfully quiet. It's been replaced by doubt, and, those numbers just staring back at you from the screen.
And that brings us to the million-dollar question, doesn't it? Is this a gift? Is this a massive sale on all the assets you wish you'd bought lower? Or is this whole thing a trap, just waiting to spring? So let's break down the two powerful and completely opposing arguments that are driving the market right now. Okay, so first up, let's talk about the bull case. The argument here is pretty simple. If you're getting spooked by all these daily price swings, you are missing the forest for the trees.
The whole idea behind the bullish thesis is that the real story, the fundamental story, hasn't changed one bit. More and more of the financial world is moving on-chain. It's moving onto the blockchain. And now, finally, the big institutional money is showing up, which makes that whole transition feel, well, pretty much inevitable.
And look, the bulls, they are not holding back with their predictions. I mean, you've got people like Anthony Scaramucci still calling for $180,000 Bitcoin by the end of this year. And get this, he calls that his cautious price target. That is the level of confidence we're talking about here. So where does all that confidence come from? Well, take a look at this. A recent Bank of America survey found that a staggering 75% of global fund managers still have zero exposure to crypto. To a bull, that doesn't look like a problem. It looks like a massive ocean of capital that's just barely started to trickle into the market. And this isn't just the usual crypto crowd saying this. Morgan Stanley's own CIO recently argued that the big bear market actually ended way back in April, and we're just at the beginning of a new multi-year bull run. His point is that pullbacks like the one we're seeing, they're classic. They're designed to shake people out right before the next big move up.
And this growth story isn't just about Bitcoin. I mean, look across the entire ecosystem. You've got Polygon building tools specifically for Wall Street. Tron is now integrated into MetaMask, which is huge. Cardano's seeing tens of millions in institutional inflows. And Avalanche is putting hundreds of millions of dollars in real-world assets right onto the blockchain. The whole foundation just keeps getting stronger and stronger.
And that brings us to the final piece of the bull case: regulation. For years, this has been the big boogeyman, right? Well, the new SEC chairman has said he wants to create a future-proof framework. That means clarity instead of constant crackdowns. And for any long-term investor, that is one of the most bullish signals you could possibly ask for. Okay, but that's only one side of the coin. Now we have to look at the counterargument. This is a much more cautious, short-term view that says, hey, even if the long-term future is bright, there are some very real dangers dead ahead. To really get this side of the argument, you have to understand this one key metric: Bitcoin dominance. As analyst Benjamin Cohen explains it, this is crucial. It just measures how much of the total crypto market's value is parked in Bitcoin. And when that number goes up, it usually means money is fleeing the riskier altcoins and running for safety in Bitcoin, which, as you can imagine, can absolutely crush altcoin prices. And this is where the alarm bells start ringing for some folks. If you look at the historical data, there's a really strong seasonal pattern where Bitcoin dominance often bottoms out and then starts to climb, right around September. If that pattern holds true again this year, it could spell serious trouble for the altcoin market. Okay, but wait a minute, you might be saying. What about the Fed cutting rates? Isn't that supposed to be rocket fuel for markets? And yeah, that's the big question, but this is where it gets really tricky. The expectation is that rate cuts mean party time, but the reality is, even after a cut, interest rates might still be above what's called the neutral rate. That means monetary policy could still be restrictive, acting as a headwind for risky assets like altcoins, not the tailwind everyone is hoping for. So, what's the bottom line from this more cautious camp? It's pretty straightforward. Be mentally prepared for more weakness. The most likely scenario, according to this view, is that we'll see a rotation out of altcoins and back into Bitcoin over the next couple of months, no matter how good that long-term story looks.
All right, so we've got two completely different stories here. One says full steam ahead, the other is shouting brace for impact. How on earth can both of these possibly be true at the same time? Let's see how this all fits together.
And the answer, the way to make sense of all this, is to realize it's not really a conflict of facts. It's a conflict of time horizons. The market is literally being pulled in two directions by two powerful forces. You have the long-term fundamentals pushing it up and the short-term technicals pulling it down.
This table really lays it out perfectly, side by side. On one hand, you have the bull case, which is all about the long term. It's focused on fundamentals and adoption, driven by big institutions and clear regulation. On the other hand, you've got the cautionary case. That's all about the here and now. Technical patterns, macroeconomics, Bitcoin dominance, and Fed policy. One sees a new bull market beginning, the other sees an altcoin pullback just around the corner.
And here's how you can visualize this playing out. This timeline kind of merges both perspectives. So we're right here, in this period of consolidation and fear. The short-term warning suggests we could see that rotation into Bitcoin over the next couple of months. But look what could be waiting right on the other side of that. That pullback could lead directly into the fourth quarter, which holds the deadline for altcoin ETF approvals, a massive potential catalyst for that long-term bull case.
So it all really boils down to this one question. The market is always telling a story. And this intense conflict we're feeling right now is forcing every single investor to decide which part of that story they're going to read. Are you focused on the potentially volatile chapter we're living through right now? Or are you reading the entire book?